Hello and welcome to this video. It's the 1st of February 2024 and what we're going to kick off with is how to plan for your trading day. Step 1, write down a plan before the session begins. Really important. You want to go into the session and see the market playing out with a plan in your head so that when things move quite quickly, you can make better decisions and a lot quicker. So step 1, obviously writing everything down. So you want to go through, look at the charts, look at the Forex calendars for news, have Bloomberg running in the background, and have a risk plan in place. You should already have a risk plan in place as a general rule of thumb, but it's important to always touch back on it so that you stick to it as best you can. The next step, plan your preferred trades. We're going to go through that shortly with the DAX and FTSE, how I look at the markets, and we'll cover all of that information shortly. And then finally, outline how you feel. So are you happy, nervous, anxious, relaxed, focused, scattered, angry, or unwell? You really want to understand the times when you do poor decisions in the market. Perhaps you don't stick to your risk plan, you go the opposite direction to your trade plan that you've outlined earlier. You want to know the times that you don't perform well, and you want to know the times that you do perform well as well. To be at the top of your game, you need to know everything about what impacts you, about what you do. So go in clear and go in ready. Finally, after the trade, look at what happened. Assess what you've done, assess what you could have controlled better, and consider how you might tweak your approach in future. So there's a pre and post trading situation, outlining how you feel. You kind of want to do that right before you get into the markets, maybe a couple of minutes beforehand, because that's when you can identify it and make a decision of whether you want to continue trading or whether you want to just leave the markets for that day based on what your answers are. So really important, all of these steps pre and post. And then another point is you want to keep track of your data. So stay in the game long enough to build a data set that you can work with and assess. Find the symbols or the markets that you work well with, and find the markets that you don't work well with, because there probably will be elements in certain markets that work well for your style, the way you think, and basically just how you trade in general. So build your data. It's the most important part of your business eventually, because you'll be able to use that data and have a confident way to approach the markets longer term, and you'll be able to understand what your expected outcomes should be. Now, let's get into the analysis phase of it. So obviously you want to write down your trade plan, as we discussed a little earlier, and we're just going to have a look at the DAX. Now, the market is hovering around these levels. So we've got the S1 breakout short and S2. It's just kind of hovering there. So we don't want to particularly go long from here as such. So when the market opens a little later on at the 10 o'clock time on this platform, ideal situation is we do come back down and touch this S2 level, because that's going to give us a nice strong point to buy from. However, what might happen is the market could push up straight into the low or the close and perhaps higher. So ideally looking for buys. We don't want to take it short, even though it might go down to perhaps even the S3. We want to look for opportunities to get long on the basis of these Camarillo levels. The targets are the extreme gap, which is the low of the previous day, and the close of the previous day as well. We could even aim a little higher up to where pricing had been previously. So pricing was up here around these R1 and breakout long levels. However, my main target will be the low and the close. Unfortunately, from here, we're about 30 points from that first target and 49 points from the second target. Meanwhile, the risk is about 40 points away as quite a tight stop if we do head down to that S2. So preferably, the reason why I want it to come down is because we could have a decent sized stop, say 30 or 40 point stop, if we came down to the S2 and bought it from there, and if it did actually happen to keep going down, we don't really want to hold a trade all the way down to the S3. It's about 60 odd points away. And for me, it's not really worth holding the trade all that distance, but there's a lot of breathing space from this level down to the stop. Whereas if we get in now using, say, a 30 or 40 point stop, at 30 points, we'd get taken out if it comes down. At 40 points, it'll be very tight, so we'd want a reaction straight off that S2. So that's how I like to look at the markets, is assess what's likely to happen, first of all, and plan that out methodically. Say, okay, I believe the market is more likely to go up than down. However, based on the risk elements and the risk reward, that kind of thing, I'd prefer to get in long from a lower price point based on the levels. So that's my idea of a decent trade plan. We're looking for a push down towards the open, perhaps impulsive outside the Bollinger Bands, and then take it long into that low price. And I just want to also look at the larger time frame. So we're going to go with the weekly. Now we're trading really high. So it's up on these sort of, it's almost like a triple top on the weekly there. Not quite, but we've touched the highs about 3 times. So there is a chance that we might start going short at some point. It's not really that clear, and there's every chance we can keep going long. So that's not worrying me too much for a long trade today. I've had a couple of down days, and perhaps the first of the month is going to be a good buying day. It looks like the end of January was quite a good selling period of time. So end of month, people are closing out the positions, wanting to start the year with some perhaps good commissions at the finance firms and the trading houses. And they've closed a lot of their long positions throughout that period. A lot of green, making it very easy for those traders to have made profit over that period if they had gone long, and they're closing those positions out now to clean up the month and start fresh. That means there could be cash, so it goes from an investment into cash, and now that cash can be transferred back into the index potentially, giving a slightly more probable long position for today as well. So it's the first of the month, it's a Thursday. Nothing really particular about the day there, but the first day of the month can be a good buying day. Have a look at the 4 hour. So we've recently touched the lower Bollinger Band on the 4 hour and coming back up long now. So potentially that is a good sign that we will have a bullish day today on the DAX. Having a look at the 1 hour, it has touched the S1 twice here in the pre-market, which indicates that potentially we might reject off that level, come down a little bit lower like we wanted, and then be able to buy off this S2 level from here. That would be probably the ideal situation for myself. Half an hour, not really anything too exciting on those other setups. Nothing really changed based on the higher time frames, other than we are sitting quite high on the weekly. I guess the weekly chart is a historic pricing point. It's the only concern that I can particularly see, and we're just wanting the market to push down to this S2 before we kind of get long there. Over to the UK, similar setup. I'm trying to find where the low price is sitting. I can't see the low. There's usually a red line just like this one, but it's probably going to be, it looks like it would have closed on the low. So it's probably in behind this grey line here, meaning that we do have an extreme gap, which is also the close. The only issue for a long position here is that we're 10 points from that close price, sitting quite efficiently. Ideal situation again is we want to push down a little bit further away from our target so that our risk reward is more valuable. If we go 10 points long, but then we go 28 points short, the risk reward is very poor and perhaps not worth it for a lot of traders. I'll probably sit out of the UK, but I will watch it for any pullbacks down to perhaps again the S2 or even the S1. I'll just do a quick check. So 19 points versus 19 probably need at least sort of 23 points, and then you'll be quite tight up against that S2. But if we do push down even further, then I'd be tempted to go long on that. Now we're going to have a look at the longer time frames, so we'll have a look at the monthly. Nothing special there, in my opinion. Weekly, again, nothing special. Day one, the daily chart, it looks like we may be turning back down if this continues, but it's not overly clear yet. We might get more of a wick for this particular day before we perhaps start heading down and get a red candle to finish the day. It's all just speculation at that point, but the last touch of the Bollinger Band was lower, so I am expecting the market to probably keep going long. 4 hour, very similar to the DAX, so we've touched the bottom Bollinger, which is a good indication that we may go long on a 4 hour period. So for 1, 2, maybe 3 candles, and then perhaps a drop down from that point. Expecting it to go long, but perhaps not forever, if that makes sense. So expecting a push up, hoping for a bit of a push down to get us into the trade, and then not necessarily holding that over more than today, because this daily chart looks like it could be turning down. Just having a look at the other time frames for anything special, not particularly. So that's my, I guess, insight into the DAX and the FTSE. So what I'm hoping for on both markets really is a pullback to a better buying position, say the S2 on both markets, and then looking for an opportunity to get long. So whether you use your footprint and order flow in the Trade of 8 or Apex systems, or you've got another technique, share with me what you guys use at the moment, what indicators you prefer and tools, just because it might give me a better idea of what to look for and share with others as well. So I hope that's been helpful. Remember to write down your trade plan before you go into the market, so you've got a clear head and you can read what you've actually thought out. And then that way, once the market's done and dusted, you can look back and tick off your trade ideas as they've happened. And then you can even compare that to your actual trading data. So you've got your written ideas, where you want to get in, where you want to get out, and then you've got what you actually did. And sometimes traders will have 2 different outcomes on both. So the trade ideas might be right, but then they trade it in the opposite direction, or who knows what they do. They do something different to the trade plan. And it just goes to show that when you get ticks on the trade plan, but then you trade it wrong, it's down to, I guess, mentality and trusting in the plan and the strategy and your analysis. If you enjoyed this video or took something positive from it, please hit the like button below. It lets me know this is helping others. To see more great content like this, please subscribe, hit the bell icon, and stay updated with the latest.